Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday, the 9th of March. I'm Stephen Carroll in Brussels. Coming up today, the price of oil jumps close to $120 a barrel amid a broad market sell-off as G7 ministers are set to discuss releasing their emergency reserves. Ayatollah Ali Khamenei's son is announced as Iran's new supreme leader as President Trump mulls sending special forces into the country. Plus, why the Iran war is the latest blow for Europe's battered chemicals industry. Let's start with a roundup of our top stories. The price of oil jumped close to $120 a barrel this morning as major Middle East producers slashed production over the continuing war in the region. The global benchmark Brent crude surged by as much as 29% to $119.50 a barrel. That's the biggest intraday move since April 2020. WTI also jumped by around a similar amount. The markets are responding to the news that Kuwait and the United Arab Emirates are reducing oil production as their storage rapidly fills up while the Strait of Hormuz shipping route remains effectively closed. Sarah Emerson is the president of research firm ESAI Energy.
I think there was the expectation that this conflict could be resolved in a couple of weeks. And what we've learned is that that's not going to be the case. So now it's a question of, well, if it's not 1 or 2 weeks, is it 3 weeks? Is it 4 weeks? Is it 5 weeks? How long is this going to last where the strait is actually closed? And producers are now being forced to shut in production.
Sarah Emerson speaking there. The oil prices pared some of those gains after the Financial Times reported that G7 finance ministers will discuss a possible joint release of oil from their reserves at a meeting later. Right now, Brent is trading up 15% on the day at $107 a barrel. WTI at $103.66, up by 14%. The US President Donald Trump, meanwhile, has sought to downplay the surge in prices. He said short-term oil prices are a small price to pay for world peace, and that they will, quote, drop rapidly when the destruction of the Iran nuclear threat is over. The oil price surge is rippling across markets with a sharp sell-off in stocks and bonds. Asia's benchmark share index dropped the most since April, with South Korea and Japan leading the declines. European and Wall Street futures are also sharply lower, with US and Japanese government bond yields rising. The dollar has strengthened against most major currencies as investors seek refuge, although gold prices dropped briefly below $5,100 an ounce. Now, all of these moves have moderated somewhat following that report that the G7 will discuss potentially releasing some of their reserves. Spiking crude prices have fueled inflation concerns around the world, reinforcing expectations that the Federal Reserve will keep interest rates on hold for longer. Iran has named the son of the late Ayatollah as its new supreme leader. According to the country's semi-official Fars news agency, 56-year-old Mojtaba Khamenei won a decisive vote in Iran's Assembly of Experts. The Islamic Revolutionary Guard Corps also pledged full obedience to the new leader. Bloomberg's senior editor Wendy Benjaminson says the decision was not a surprise.
This was the man that the U.S. really expected would take over for his father. It's the first generational succession since the 1979 revolution. And he seems to be the kind of guy who will continue in his father's footsteps in every way.
Bloomberg's Wendy Benjaminson there speaking following the announcement. The US President Donald Trump told Fox News host Brian Kilmeade that he was unhappy with the appointment. Mojtaba Khamenei's selection signals that Iran's regime is less likely to concede to Trump's demand that they surrender and that he'll continue his father's hardline approach. The United States is considering the deployment of special forces to seize Iran's uranium. It's been almost 9 months since UN inspectors last verified its location. Officials told Bloomberg there's growing concern the highly enriched stockpile may have been moved. Speaking to reporters on Air Force One, President Trump was asked if he'd use ground troops to secure it.
To find out about that, we haven't talked about it, but it was a total obliteration. They haven't been able to get to it. And at some point, maybe we will. That would be a great thing. But right now, we're just decimating them. But we haven't gone after it. But something we could do later on.
President Trump was speaking as the US State Department ordered American diplomats and government employees in Saudi Arabia to leave the country, citing safety risks. The move marks the agency's first ordered departure since the start of the war on Iran. The British Prime Minister Keir Starmer and Donald Trump discussed the conflict in Iran after a week of public disagreement between the two leaders. Downing Street says the two spoke by phone about military cooperation and the use of UK air bases in the region. It comes after a week of criticism of the Prime Minister by the US President over Britain's support for his war in the Middle East. The UK's Foreign Secretary Yvette Cooper is trying to play down the rift.
The US President has the responsibility to do what he thinks is right in the US national interest. The UK Prime Minister has the responsibility to do what he thinks is right in the UK's national interest. That means sometimes we will disagree.
Cooper was a junior minister when the UK invaded Iraq in 2003, which has had a lasting impact on public opinion. A recent poll by YouGov showed only 8% of Britons supported the UK getting directly involved in the Iran war. Well, the Prime Minister has raised the prospect of intervening to help households with energy bills as oil prices climb. With more, here's Bloomberg's James Woolcock.
Keir Starmer is under pressure from trade unions and his own Labour MPs to prepare a support package in the event of a prolonged conflict. In a pre-released extract from remarks he is due to deliver later today, the Prime Minister is expected to say the public is rightly worrying what this means for life at home, their bills, their jobs, their communities. I want to address these concerns head on. The comments come as the Resolution Foundation think tank warns that last week's spike in gas and oil prices could cost a typical household £500. According to the Office for Budget Responsibility, the last time the government intervened during the Ukraine war, the cost of supporting households and businesses due to the energy price spike topped £78 billion over 2 years. In London, James Woolcock, Bloomberg Radio.
In Germany, the party of Chancellor Friedrich Merz narrowly lost a crucial state election. The incumbent Green Party won just over 30% of the vote in Baden-Württemberg, compared with 29.7% for Merz's CDU. The CDU had been projected to win the region before a gaffe-ridden campaign. Support for the far-right AfD party nearly doubled to 18.7% from 5 years ago. And those are your top stories on the markets. The MSCI Asia Pacific Index down currently by 3.9%. Eurostoxx 50 futures 2.1% lower. S&P E-minis on Wall Street down by 1.5%. Oil prices up 15% on the day for Brent crude, $106.72 on the barrel, but moving fast. The Bloomberg Dollar Spot Index up by 0.3% this morning. Well, in a moment, we're going to bring you the latest on how the war in the Middle East is another blow for Europe's chemicals industry. But let's first bring you up to date on the surge in oil prices as investors are thinking again about what the Iran war means for energy markets. We've got Stephen Stapczynski with us, who leads our team covering energy in Asia. Stephen, talk us through what's been happening since crude markets reopened. We've had this massive surge in prices and now somewhat of a moderation after this latest reports about the potential for a release of reserves.
Yeah, so I think the market over the weekend was getting more and more stressed out, according to the people that I was talking to, at least. You know, you're going into the weekend, you're not sure what's going to happen. You got 48 hours. How will the market open? And I think some of the worrying things that happened over the weekend is the retaliatory strikes from Iran continued. It did not look like there was any easing of tension. In fact, it looked like it was getting worse. The U.S. wasn't showing like it's going to back down, especially rhetoric coming out of the White House and from Trump himself. And then on top of that, you had some major producers. You had Kuwait, and you also had ADNOC looking to adjust or lower their oil production because their inventories are getting high as they can't export the fuel. And so because of all of that, you saw this huge run-up in prices in the Asia morning. First, we hit the $110 level for Brent, the first time in over 3 years. And then we were getting very close to $120. Then the FT reported a little bit less than an hour ago that the G7 nations were going to meet today to discuss a possible release of strategic reserves in course together, basically, and have a meeting with the IEA, which helps kind of coordinate all of that. That meeting, according to the FT, is happening at 8:30 a.m. New York time, which is a very important time to be watching out for. And also, it looked like there were already some countries that were basically approving of the plan. They were for a potential release, which would be the United States and 2 other G7 nations. And then you saw oil prices come back a little bit. You were still above $100. There's still a lot of fear and anxiety in the market. And I think when you talk to traders, a strategic release does help to ease things, no doubt. But it's just a bandage, because with the Strait of Hormuz shut, that's cutting off 20% of global seaborne oil supply. And as long as that remains shut, there are going to be parts of the market that just aren't getting the oil that they need. And if you do get it, it's going to be too expensive.
What's the trajectory from here then? The longer the market remains closed, how much further could we see oil prices go?
Yeah, I mean, we've got warnings. So Qatar's energy minister told the FT late last week that we could see Brent hit $150 if this remains shut for weeks, because we're going to have all of these oil producers basically have to reduce their supply or close their supply, like we saw with Kuwait and ADNOC. Likewise, you've seen some of the banks and other analysts saying, $200 Brent, which we've never hit before, could be something that is a possibility. But we're in, we're quite frankly, we are in uncharted territory. Never before has the Strait of Hormuz been shut like this before, and not for more than a week. This is wild. This is the sorts of situations that countries make emergency plans for. This is why the strategic reserve exists, for this very reason. And so now we are actually living it. And so where do oil prices go? Everyone has their guess, but I think it's pretty clear that as long as this remains shut, oil prices are going to go up.
Okay, Stephen, thank you very much for joining us. Stephen Stapczynski there, leading our team covering energy in Asia. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Well, that jump in oil and gas prices is piling further pressure on energy-intensive industries in many parts of the world. Europe's chemical sector was already reeling from the last energy shock. Financing has become strained and many plants are at risk of closure. So what do these latest developments mean? Let's bring in our German industry reporter, Marilyn Martin, who's been reporting on this. Marilyn, good to have you with us. What was the state of this chemicals industry before the Iran war started?
Yeah, so the chemical industry is a cyclical sector in general, but the downturn that we've seen since 2022, since the energy price spikes, have been structural. So both industry experts, but also CEOs agree that it's a structural downturn that we're seeing, and that's mainly because energy prices are higher than in the US, than in the Middle East, than in China, already before the Iran war. And then we also have oversupply in the market. So that's hitting globally, but it's especially hitting Europe hard because the sector is struggling so much with the energy prices already. So in China, we had a lot of new capacity added, and that's, of course, putting a strain on European assets as well. And at the same time, you have very muted demand on the continent because the general economic situation is not the best. The car sector is struggling. A quarter of German chemicals production goes into the auto industry. So with that sector struggling, of course, you also have less demand for chemical products, and that's hitting the sector.
So what does another jump in energy prices mean for this sector that's already, as you say, been under strain?
Yeah, so it's actually a really bad timing because, as I said, the market is down already, and you had the biggest weekly gains for gas prices in Europe last week. An analyst I talked to said that there's an estimate of 3 billion euros in extra costs to the industry annually if these prices stay elevated. And the problem is that, for the chemical industry, the main figure that you're watching is the capacity utilization of plants. So how much capacity you're using from the plants that you have. And that's historically been quite high. But in recent years, it's been as low as 70% right now. And you need 80% for profitability. So plants are already operating at a very, very low rate. And now with gas prices and oil prices being even higher, that's of course not helping the sector. And especially because if you look at it, energy is not only needed to produce things, but it's also a feedstock for the chemical industry. So you can't just switch to renewables or something else. You need gas and oil as a feedstock for the industry. So there's no easy solution for the sector.
Are there efforts being made at a government level to protect this industry? How economically or politically significant is it in Germany?
Yeah, it's one of the biggest sectors in the German economy. So politicians have started to realize that the sector is really struggling a lot. There are discussions right now on the EU level with the Critical Chemicals Alliance, as it's called, that in the next weeks or months they will decide which assets are classified as strategic or important for the resilience of the continent, because chemicals go into everything, also into ammunition, for example, which becomes more critical when we look at European resilience also from a defense perspective. So there are some efforts being made, but the main question is what it would mean if like the EU classifies them as critical or as needed for European resilience, because it's just very unprofitable for a lot of assets right now. So like the question is, will governments be able to step in and like subsidize the sector? And how willing are they to do that? And also in the economic situation that we have right now, there are a lot of sectors struggling. So why should chemicals get the support? And will there be enough money even left for the sector?
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.